You're welcome to the Economy and Politics Conversation. I am Ottoabasi Abasiekong. This edition will discuss the Investment and Securities Act 2025 as a catalyst for Nigeria's sustainable economic growth. Joining me virtually for this conversation is Professor Uche Uwaleke, President, Capital Market Academics of Nigeria. It's great to have you, Professor Uche Uwaleke, on the program, and it's best to say nice to have you for the first time in this year.
Thank you so much. It's indeed my pleasure.
And of course, we begin a very interesting note as the much-awaited ISA Act 2025 has been signed into law, marking a significant opportunity for our market. But of course, we'll be guided by the fact that there was a release from the Securities and Exchange Commission, so we're still awaiting the gazetted copy from the Honorable Minister of Justice, so that will guide our conversation. But let's begin by asking, this has been signed into law. It's a welcome development for the capital market. We published your own perspective on the ProShare platform that it will catalyze the market. But give us further insights. How will this deepen capital formation in the country in a way that boosts the country's market to GDP size? It's currently hovering around 17 to 18%. We need to see more traction.
It's indeed a welcome development, as you rightly noted. The market is excited about the fact that this bill, which has been in the National Assembly for a while, has eventually been assented to. So it's now a law, replacing the ISA 2007. As you know, ISA 2007 has been the major investment law in Nigeria up to this moment. And since 2007, a lot has happened in the in the capital market space in Nigeria. We have had improvements in market infrastructure. We've had a number of exchanges that have been licensed since 2007, talking about the FMDQ, the NAST, including commodities exchanges, the Lagos Commodities and Futures Exchange, the FX, and the Gazewa. And we've also seen enhancements and even in the number of products. Since 2007, the market now trades exchange-traded funds, including some derivatives. So all these improvements, including the fact that even as recent as last year, the SEC licensed two cryptocurrency exchanges. So all these developments, of course, will require robust regulation. So the ISA 2025 has captured all of that and, of course, enhanced the regulatory powers of the Securities and Exchange Commission. So there's no doubt that it will boost the capital market in Nigeria. For one, it aligns our regulations, it aligns our legal framework with international standards. The IOSCO, International Organization for Securities, Commissions, requires that investment laws be updated from time to time, and of course, IOSCO has principles and objectives. The three core objectives of IOSCO, talking about investor protection, talking about having a fair, efficient, and transparent market, and of course, mitigating systemic risks, have all been taken into cognizance in law. IOSCO requires that capital market laws and regulations be updated from time to time. That is why you find in places like South Africa, their main capital market law, which is the Financial Markets Act of 2012, has undergone a number of amendments, the latest being 2021. In India, it is also the same case. Even their law, which is as old as 1956, the Securities Contract Act, has also undergone a number of amendments. The SEBI Act in India, the Securities and Exchange Board of India, also witnesses frequent, regular amendments. So in the case of South Africa, for example, you notice that that market is a lot advanced. In South Africa today, you have over 1,000 financial derivatives contracts. You have over 180 exchange traded products, okay? And you have an equities market that has a capitalization of close to $1 trillion. So all of that, have been enabled by robust, capital market, regulation. And that is what we're about to also witness in Nigeria. We now have, as I said earlier on, a capital market law that is very much modern, that is very much in alignment with global best practice. So essentially, it has expanded the powers of SEC, to further regulate the market and further protect investors. So it's a welcome development indeed, and I have no doubt that that will spur more interest in the capital market, not only from the point of issuers, but also from that of the investors.
Yes, and I agree with you around the regulations, but our trust of our conversation is how this will support sustainable economic growth in Nigeria, even as the economy seeks to be over a $1 trillion economy by 2030. Conversation around this act shows that from the release and all that, there's a guidance that will be flexible for subnationals to access the market for long-term funding. From your position as a former finance commissioner at the subnational level, what is your advice to state governments in leveraging the capital markets to fund significant projects of immense economic value?
I think the ISA 2025 will present huge opportunities for subnationals, both states and local governments, to access the capital market for long-term funds rather than depend on the banks, which of course, is more or less concerned with the short end of the financial market. So banks can only give you short-term loans. For development purposes, subnationals require long-term capital, long-term funds. The rigidity, so to say, in the ISA 2007 did not allow a number of states to access the market. And that is why, as we speak, only a handful of states, of course, led by Lagos, Osun, the likes of Kwara, Edo, Ebonyi, Imo, Nasarawa, Niger, Katsina. I can count the number of states that have accessed the capital markets, by way of issuing bonds, out of the 36 states that we have in the country. And of course, for local governments, the story. For local governments, out of the 774, only one, has so far accessed the capital market, and that's talking about the Lagos Island. So this law has made it a lot more flexible for subnationals to have access to funds. Section 226 of the old law, the ISA 2007, places a cap on the percentage of money that states can raise from the capital markets. Okay, that law says states are not allowed to raise more than 50% of their outstanding loans plus the new loans, more than 50% of their actual revenue, in the preceding year. So if a state, for example, has made 1 billion naira in any particular year, if it wants to raise funds from the capital market the following year, the much it can raise will not be more than 50% of its outstanding loans. So if outstanding loans, including the ones it's about to raise, is up 500 million, it means it can't raise more than that. So that was a major limitation. So this ISA 2025 has made it a lot more flexible for states or local governments to also access funds from the capital market. And beyond that, remember I said there's also in giving Securities and Exchange Commission a lot more powers, and it's also made regulations around even the time to market. Time to market is now shorter. The ISA 2005 has also made it possible for issuers to assess the market at a very shorter period. Okay, so if any state is going to the market to raise funds now, it will take the state shorter time to complete the process as opposed to what we used to have.
Very encouraging. Very encouraging. Prof, will this act incentivize the long-awaited listings of FGN-owned enterprises and assets in the market? Federal government-owned enterprises like the Nigerian National Petroleum Company Limited. We saw a little blink of them planning an IPO. Later that story, we did not see it again. Other assets, will this incentivize it? What should the Ministry of Finance Incorporated and the Bureau of Public Enterprise be doing in terms of positioning with this ISA 2025?
The ISA 2025 will improve investor confidence. And if that happens, we expect more people to, play in the market. And I also talked about the fact that in terms of time to market, that has also been made shorter. It's now easier for issuers to assess the market. So that should be an incentive to government-owned enterprises. The fact that they don't have to now take so long to assess the market. And the regulations too for commodities exchanges. The ISA 2025 has now strengthened regulations around commodities exchanges. And that is expected to rub off positively on the government enterprises, particularly those in the agri sector, in the mining sector, for example. It's now easier for a company like Nigerian Mining Corporation, okay, to come to the market to raise funds. Some of these government-owned enterprises in the agri and mining sectors, oil and gas sectors, you mentioned NNPC, they have very, very commercial potentials. So they can also take advantage of the regulations now in the market to assess the market. That of NNPC is quite instructive. There is need for NNPC to seize the opportunity now and come up with, especially now that we have a new board, part of the assignment of the new board, the president has told them to first start by, doing a comprehensive audit of their portfolio of assets. Okay, so part of what I also expect them to do would be to, come up with an IPO plan. There should be an IPO plan, okay, showing a timetable and various stages of the IPO process, of course, including the evaluation process. So the new law we have now, has made it a lot more easier for even government enterprises to, assess the market. And as I mentioned earlier, companies like the Nigerian Mining Corporation, even in the agri sector, the National Agricultural Insurance Corporation, for example, can also assess funds. Some of them can do so, whether not directly, but through SPVs, to raise funds, from the market. So it presents a very huge opportunity.
And then the last part, Prof, now, the digital asset space has now received a boost with this ISA Act 2025. It's being classified as securities, like the news release from the Securities and Exchange Commission stated, and of course in your article too, published, it also raised that. Is this the game changer in increasing investor participation in the market and unlocking economic opportunities for Nigerians? The average age of investor as captured by the Central Securities Systems PLC is 53. We need to have the young people on board. Are we now going to onboard more young investors with this one?
Yes, I think so. It's indeed a game changer in several respects. To start with, the fact that the powers of the SEC has now been enlarged to accommodate digital assets. Before, it wasn't very clear as to who should be regulating digital assets in Nigeria, whether it's the Securities and Exchange Commission or the Central Bank of Nigeria. So today, that regulatory overlap, appears to be removed, by virtue of this law. The law has made it clear now that digital assets fall under the purview of the Securities and Exchange Commission because they are considered as securities. In some other jurisdictions, we still have this confusion, including the United States. In the United States today, there is no clear, yes, you don't have any clear regulator of the digital assets. Sometimes the Internal Revenue Service, whenever digital assets are seen as property, the Internal Revenue Service of the US would come in. When they are seen as commodities, the Commodity Futures and Trading Commission, becomes responsible. And is when they are considered securities, especially when it involves the issuance of initial coin offerings, when issuers or companies issue digital tokens. So that's only when the Securities and Exchange Commission in the US comes in. Okay, so you have multiple regulators in the US. Okay, and that brings about uncertainty. So today in Nigeria, that uncertainty has been cleared. It is now that of the Securities and Exchange Commission. So in the future, the next few months or so, we expect to see more virtual assets service providers. We expect to see more digital, exchanges in Nigeria, and we also expect to see even a number of, digital products. And what that means is that it will also attract a number of youths. Retail investor base is likely to increase because the youths in Nigeria are interested in this kind of thing, and the law has now provided them an avenue to legitimize their involvement, in cryptocurrency, provided the, cryptocurrencies, of course, are regulated. So I expect to see, as I said, a boost in retail investor base, more youth participating in the market, and that way, of course, you can talk about even improvements in market infrastructure, via fintech. So the market contribution to GDP will, improve, as a result. And even in the commodities market space, I talked about two regulations now that have strengthened that. Regulations now that have also strengthened the operations of certain market infrastructure like central counterparty, depositories, central clearing systems. Of course, these are very key market infrastructure that are required to ensure that systemic risk is minimized. So once investors are assured that systemic risk is minimized, once they're assured that their investments are safe, you will expect that they want to participate. And again, a law that has now given SEC more powers to deal with insider abuse, to deal with market manipulation, to deal with Ponzi schemes. Okay, the ISA 2025 has now provided stiffer penalties for operators of Ponzi schemes. Then there is also the Investor Protection Fund, which has also increased compensation for losses arising from, the withdrawal of licenses of any capital market operator. Then there is also the issue of clarity as with respect to mergers and acquisitions involving public companies. Now, public companies are expected to obtain license from SEC before they can consummate, merger and acquisition. So all this we have in the new law will help to boost confidence, will help to attract foreign investments, and ultimately increase the size of our market to GDP.
Yeah. Thank you very much, Professor Uche Uwaleke, President of the Association of Capital Markets Academics of Nigeria. Very clear excitement to this ISA 2025, ISA Act 2025. We expect that time to market will improve. We expect that it will bring more efficiency to the market and linkage between the market and the economy, attracting agriculture, mining, oil and gas activities, and the rest. Also, bringing a new vista of opportunities and new retail investor base of young people, so that when we look back at the retail investor base, we should be looking at an average age of an investor at least 25 years. That would be remarkable. That would bring new investors. So to the young people, of course, you have the act there to explore. And of course, strengthened regulations. That is very important. And investor protection for those who had the challenge of the 2007 market crash. It is time to know that investor protection is taken seriously by this act. So a lot to look out for, but of course, Prof, when the full document of the gazetted copy is out, of course, we would all see everything clearly and unpack further. But thank you very much, Professor Uche Uwaleke, for the time. Always nice to discuss capital market developments as it relates to the economy with you. Thank you once again, Prof.
Thank you so much.
To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further. Until we come your way again and reach yourself with knowledge of socioeconomic developments around you, it is wise. Ottoabasi Abasiekong, thank you for watching, and bye for now.